Hey guys, Griffin Cooper here at Ablewaytech. It's December 26, 2022, and I wanted to go through our daily debrief from our trade last Wednesday, December 21st. One trade we had during the normal Kata challenge, as our rules are right now, in EWW. So this was here, Wednesday. The open here. This vertical line is when I started trading, and we were looking for an unambiguous move down to frame our trade. It was in a critical state. And what we do to find those targets is we use what's known as the frog box, this box here. This is the intraday calculation between signal and noise. It's using the average range of the last 30 days. I'm sorry, the standard deviation of the range of the last 30 days. And we have that calculated on the owl bundle here as 34 cents. So when we had this reversal, the PSAR flipped, we hang that frog box off the top tick here. And we can see by here it had made a non-noise move down. It actually made about two of them and then started to reverse. So around here, when it crossed this baby dragon, which we have. So this colored line is the linear regression, moving linear regression line, 10 period, which is a smoothing out of the price. And then we put a moving average on that, 3 periods, and that's a thin purple line. We call that the baby dragon. And when this RL10 crosses that, that's our first warning sign that this could be a reversal. So we saw that, and then to frame the trades, what we want to see is a 2-to-1 from what would be our entry to our target. Now for my targets, what I use is the purple line, this top line, this high right here of the dragon. Well, what's the dragon? The dragon is nothing more than, this is a 10 period simple moving average, which shows the trend of the price, and then we put a half standard deviation Bollinger Band on it. So that's kind of our noise width to see what's the difference between, basically we find statistically significant highs and lows with it. So I hang this little target line off the top of the dragon here. We know we'd get in when the RL10 crosses this PSAR, and the PSAR flips. So it goes from here to here. So that would be what our risk was, and that's 2 units of reward up to the top of this dragon. So we were ready to take the trade because it was a low risk idea, meaning we were risking 1 for the possibility it could get to 2. So when this RL10 crosses over the dragon, we entered with our stop in the normal place where the PSAR flipped down here. So this was our stop, and we've just been using a trailing stop recently. And I actually drew in with this red line the path that the trailing stop took, which was kind of interesting. I'd never done that, or hadn't done it recently, at least with a trailing stop. And you can see there's a bar here, it moved up, went sideways, new higher high, moved up, sideways, higher high, moved up. So by here, we were 1 R in hand, which would have meant our stop was now break even, or maybe a little bit above break even, which is nice. Our risk was out by this point. Again, moved up here. So now our stop is, we're going to make about half an R on that. We're happy with that. And then here it started to make, zoom in on this puppy. It started to make higher highs with each bar. As you can see here, we trailed it like that. Now, here when we get to 2R, which means the price has gotten to 2 times what we were going to risk on it, right? We were going to risk. So we were going to risk this. This was our unit of risk. And then we had 2 of these. We had already made 2 times what we risked. So at that point, what I did is I ratcheted up the stop. You can see here up to what would be 1.5. So now we're going to bank in, no matter what happens, 1.5 times what we risked. We had this down bar where it came to basically this the spine of the dragon, that middle of the dragon, and we got stopped out in there. And this blue vertical line, we stopped trading. It did go up actually a little bit more. If we would have just kept trailing with the 1R, we would have got up to about here, and then it would have pulled back, and we would have been stopped out. Would have been stopped out about right here. So that would have been about the same exit. That's kind of interesting. That's it right by the numbers. This is the supported spring crossing pattern. We have this hard sell-off, which creates the low risk idea back to return to this high. We got it this time. That was nice. And yeah, so that was 1.48R in EWW on 12/21. If you'd like to know more about these patterns that we trade 3 basic patterns that we teach in our applied systems development course. In the Kata challenge, we give tons of live trading examples, as well as how I went through from being a beginner trader to making consistent money each month. That's available at Ablewaytech.com, or you can subscribe here to watch more. Keep doing the live trading example. That's helpful for me, and I hope it helps someone else. If you have any questions, comment below or send us an email. And have a happy holidays, everybody. Thanks for watching.